Welcome back to Level Up Trading, the podcast where we explore the psychology of trading. I'm Avery.
And I'm Melody. Today we're diving into a topic that I think is the single biggest stumbling block for new and even intermediate traders. It's this idea that you just need to find a better strategy.
Exactly. The endless hunt for the holy grail system. But what if the problem isn't the strategy at all? What if the real issue is that you need a strategy that actually fits you?
That's the core of it. We see it all the time. Most people don't fail at trading because they're not smart enough. They fail because they're trying to be someone else in the market.
They're copying, right? They copy someone else's strategy, someone else's trading schedule, their risk tolerance, even their personality.
And then they're genuinely confused when it doesn't work for them. It's like buying a marathon runner's shoes and expecting to run a sub-3-hour marathon on your first try. The gear isn't the engine.
Exactly. It's the illusion of a paint-by-numbers solution to a deeply complex, personal puzzle. These gurus are selling certainty, and certainty is probably the most valuable commodity to a confused or struggling trader. But it's false certainty. What actually drives performance is your own psychology. That's the real engine, and it's something you can't outsource or copy. It has to be understood. We see the classic example all the time. Someone watches a trader on YouTube who scalps futures for 2 hours every morning and makes it look like printing money.
Oh yeah, the high-octane, fast-paced stuff that looks so exciting. So they think, I can do that. They sit down, try to do the same thing.
And their body immediately rebels. Their heart is racing, their hands are shaking. They can't pull the trigger on a perfect setup because they're frozen by anxiety.
Right. Or worse, they overcome the fear and start over-trading, clicking buttons out of a desperate need to make it work, which is just a recipe for disaster.
And this is where the self-blame starts. They think the problem is their discipline or their psychology, or that they just don't have the right setup. They think they are the problem.
Exactly. But the real problem is so much simpler, and for many, it's harder to accept. They're just trying to become someone they're not.
So let's dig into that. Why does copying feel so safe, and why is it almost guaranteed to fail? I think it comes down to responsibility.
Totally. Copying feels safe because it removes the burden of responsibility. If you see someone else being profitable, the logic is very seductive.
The thinking is, if I just do what they do, I'll get the same result. It's comforting. It gives you a sense of certainty in a world, trading, that has very little of it. It gives you hope.
But trading doesn't work like a recipe for a cake. With a cake, if two people follow the exact same instructions, they get the same cake. Trading isn't like that.
Not at all. Two people can take the exact same trade, same entry, same stop loss, same profit target, and one will execute it cleanly, clinically, without emotion.
While the other one completely self-destructs. They'll hesitate on the entry, move their stop when the trade goes against them, exit way too early at the first sign of profit, and then revenge trade when they miss the big move. It's a spiral.
Same strategy, different person, radically different outcome. Because you're not just trading a chart on a screen.
This is the key. You are trading your own nervous system, your emotional tolerance.
Your past experiences with loss and money, your innate need for control.
Your patience level, your entire lifestyle, the financial pressure you're under, the time constraints you have, even your basic personality. And no YouTube strategy can account for all of that.
That's why trading is often called the ultimate mirror. It has a cruel but honest way of revealing exactly who you are.
It really is. If you're an impatient person in life, trading will punish you for it. If you're impulsive, trading will amplify that trade to a devastating degree.
Right. If you're fearful, it will expose that fear. If you crave certainty and can't handle ambiguity, trading will frustrate you endlessly.
This is exactly why two traders can learn the identical system and have completely opposite results. One trader feels calm and patient while waiting for a setup for 3 days. The other feels tortured by the inaction.
Or one trader feels comfortable risking $1,000 per trade and can execute without blinking. The other feels physically sick to their stomach risking just $100.
Yeah, one thrives in the chaos of a fast-moving market open. The other just freezes, total deer in the headlights. Neither of these people is right or wrong, they're just different.
And trading doesn't reward sameness. It rewards alignment. Alignment between your strategy and your core personality.
Which brings us to what I call the big lie of trading. Somewhere along the way, we all absorb this idea that there's a best way to trade, and I just haven't found it yet.
The search for the perfect style. Should I be scalping, day trading, swing trading, position trading, options, futures, forex, stocks? The list is endless.
And the truth is, every single one of those styles has wildly profitable traders, and every single one has a graveyard of blown-up accounts. The difference is not the strategy itself.
The difference is the fit. A strategy that fits your personality will feel almost boring, but it will be sustainable. You can do it day in and day out.
But a strategy that doesn't fit your personality will feel exciting and thrilling, and ultimately destructive. And guess which one most people chase?
They chase the excitement every time. So let's get really practical. Let's talk about some specific personality traits that matter far more than any technical indicator or strategy.
Okay, first up, patience versus the need for stimulation. This is a big one. If you are a person who needs constant action and gets bored easily, waiting days for a single trade setup will feel like absolute torture.
Unbearable. You'll force trades that aren't there. You'll get bored and start gambling. You'll break all your rules just to feel something. A swing trading approach for that person is suicide.
Right, but if you're someone who genuinely enjoys waiting, observing, and letting things unfold slowly, swing trading might feel completely natural and stress-free. Neither approach is superior. One is just you and the other isn't.
Okay, what about number 2? Risk sensitivity. This is physiological. Some people feel actual physical stress when their money is on the line. Cortisol spikes, fight or flight kicks in. Others, they feel almost nothing.
And this isn't about being tough or macho, it's your biological wiring. If even small losses completely ruin your focus for the rest of the day, you have to listen to that. You must trade smaller or use a slower time frame.
No mindset hack is going to rewire your nervous system overnight. The goal is not to man up and force yourself to handle more risk. The goal is to design your trading around your natural limits.
Okay, third trait, need for control. Some traders need precision. They want tight stops, exact entry points, and immediate feedback on whether they were right or wrong. They need to feel in control.
Totally. Scalpers often fit this mold. Then you have others who are completely comfortable with uncertainty. They can put on a trade with a wide stop and let it breathe for weeks. They think probabilistically, not in terms of being right or wrong on any single trade.
If you have a high need for control, position trading will make you crazy. The lack of feedback will be maddening. But if you accept uncertainty, the constant decision-making of scalping might feel suffocating. Again, it's about the fit.
And the last one, which is maybe the most practical, is time availability. A strategy that requires you to be at the screen for the first 2 hours every morning, making fast executions and constantly monitoring,
will absolutely destroy someone who has a 9-to-5 job, kids to get to school, and inconsistent availability. It's just impossible. You don't rise to the level of the strategy must fit into the reality of your life.
This all ties into the myth of just be more disciplined. People throw that word around like it's a magic wand.
Right, but true discipline is not about ignoring who you are and forcing yourself into a box. Real discipline is designing a system that doesn't constantly fight your human nature.
If your strategy requires superhuman patience, but you are naturally a restless, action-oriented person, trying to force it isn't a display of discipline. That's self-sabotage. You're setting yourself up to fail.
True discipline in trading looks like creating guardrails. It's trading a smaller size so your emotions don't get hijacked. It's taking fewer, higher quality trades. It's having crystal clear rules. It's about building a structure that protects you from your own worst impulses.
The best traders aren't stronger or more disciplined than you in a brute force sense. They're just better aligned. Their system works with their personality, not against it.
And it's not just personality, right? Your goals dramatically change what the right strategy is. This is another area where blind copying gets people into trouble.
Absolutely. Your goals matter more than any P&L screenshot you see on Twitter. You have to ask yourself, what am I actually trying to do here? Am I trying to replace my income? Supplement it?
Or build long-term wealth. Am I planning to trade part-time forever, or do I want to go full-time eventually? The answers change everything.
A 22-year-old with no kids and no mortgage can trade aggressively, swinging for the fences. But a 40-year-old with a family and a retirement to protect probably need a strategy that prioritizes consistency and capital preservation over excitement.
Neither is wrong, but if that 40-year-old is copying the 22-year-old strategy, it will quietly sabotage them because their goals and risk profiles are completely misaligned.
This leads us to the quiet power of what I call boring trading. Here's something you will almost never hear said online.
Let me guess, the best trading style, the one that actually works long-term, often feels boring.
Exactly. Not exciting, not dramatic, definitely not heroic. Boring means it's repeatable, it's manageable, and crucially, it's emotionally tolerable for you.
If your trading feels like an emotional roller coaster with huge highs and devastating lows, it's probably not sustainable. The market doesn't reward fireworks. It rewards those who can just show up day after day and execute their plan.
So, how do people actually do this? How do you find a style that fits you? It starts with asking better questions.
Instead of asking, what is the best strategy I should trade, you need to start asking questions about yourself.
Questions like, when do I feel calm in the markets? When do I feel rushed and anxious?
How much of a loss can I emotionally tolerate before my decision-making is compromised? How much time can I realistically commit each week without burning out?
Do I prefer the speed of scalping or the space of swing trading? Do I like the precision of technical entries or the broader view of probabilistic thinking? Your honest answers to these questions point directly to your style.
The answers aren't on YouTube. They're not on Twitter or in some Discord group. They're in you. You have to do the self-reflection.
And finding that style requires experimentation, but experimentation without ego. This is where people get tripped up.
Yes, it means you have to be willing to trade small with money that doesn't matter. You have to observe yourself like a scientist. You need to journal your emotions, not just your profit and loss.
And you have to stop trying to force profitability too early in the process. You're not testing strategies to see if they work. You're testing for compatibility. You're dating the strategy, not marrying it.
That's such a critical distinction. A losing strategy that fits your personality can be refined and optimized over time, but a supposedly winning strategy that doesn't fit you will eventually break you.
Which explains why so many traders quit right before they find their footing. Most traders quit because they think failure means they're bad at trading.
But often, all the failure means is this style isn't you. It's a data point, not a verdict. They blame themselves instead of simply identifying the mismatch.
And so they leave the game, frustrated and convinced they don't have what it takes, right when they might have been 1 or 2 adjustments away from finding true alignment.
So if we had to leave our listeners with one final thought, what would it be? For me, it's this: become more you, not more like them.
That's it. The market does not reward imitation. It rewards authentic self-knowledge. Your job as a trader is not to become some famous guru. It's not to trade fast or trade big.
Your job is to build a way of trading that you can actually execute, that you can repeat consistently, that you can survive emotionally, and that you can live with day after day.
The best trading ads you will ever find is not on an indicator or in a $1,000 course. It's knowing yourself well enough to stop pretending to be someone else.
So if this episode resonated with you, take some time today, not to find a new strategy, but to study yourself. Write down the answers to those questions we listed.
Because the market doesn't need another copy of someone else. It needs you, fully aligned, fully honest, and fully yourself.
Couldn't have said it better. That's all the time we have for today. Thanks for tuning in to Level Up Trading. We'll see you on the next episode.